subscribe and become a member on Patreon. Oh.
I have a quick question for anyone who voted for Donald Trump. What are you going to tell your child when they come home from school crying because their best friend was just taken out of their class?
You don't want to ask me those kind of questions. Paul, Willie, Zach, what's happening? Scatmouth, what's going on? Triple Q Queen, what's going on over there? Uh-oh, here we go. I don't want to start a damn poll. Why do I want to start a damn poll? All right, Pastor Kevin, Triple Q Queen, what's going on? Traveling Earl, Pastor Ken, Carlos, que pasa? Best cut cult leader. Mike, Bobby, what's going on? All right, Pete, Tony, alrighty. Good evening, everyone. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, looking for a simple, safe, predictable, consistent 1% per week, using nothing but pre-qualified dividend stocks, and those are companies I've consistently increased their profits for at least 2 decades. 20 years of continuous profits. What the hell's wrong with that idea? I think that's a great idea. Think about it. Why would you invest money anywhere else unless the company is consistently? It just doesn't make sense. Well, at least not to me. Now, some of you guys may have something different that you're looking for. You know, capital appreciation, when you buy a stock and overnight it jumps through the roof. Well, you're in the wrong place. It's not what I'm looking for. Okay, if it happens, I'm looking for predictability. I'm looking for consistency. I'm looking for profitability. And most important, preservation of my capital. I'm retired. I do not feel like going back to work. I could, but it's selfish. I've been working since 1973. Okay? So, I'm not even going to ask for forgiveness. Forgive me if I don't want to work anymore. I think 40 or 50 years is plenty of time. All right, so that being the case, who do we have over here? Sonny, Mr. 3P, what's going on? Adam, what's going on? Real World Dad. All right, hand. Born to Dolt. No idea what that means, but hello. Kimberly, how are you doing? This message is held for review. That's never a good sign. Emmanuel, what's going on? JP, Ted, Kenny, what's going on? Remy, how you doing? Julie, Kane, what's going on? Emilo, what's going on? G-Love 89. Porcupine Pete. Pete, do you know there's a law in the state of Florida? There's a law on the state of Florida. Porcupine. I kid you not. It's an actual law. It's against law to have sex with a porcupine. Sorry for you, Pete. You're going to be dry as a bone. Anyway. Approving your location. I have no idea who Jimmy is, but alrighty. Born to do it. Winning affirmation. Okay. Nice comb over. You like that? Hey, I'm 62 and I still have almost all my hair. You like that? So when you get in your 60s, let's see if you still have your hair. Is it illegal to do that with I can't see what that is. I'm on. George, what's going on? Po boy. Alrighty. So, we haven't had anybody ask to look at anything yet. Ellen G, what's going on over there? How are you doing today? Mark, Danny boy. All right, APE. Amen. What is APE? Well, let's take a good look at it. Oh, let's check out Nike, because we looked at that one this morning. Per week. That's what we're looking for. Nat Gas, what's going on? Okay, Remy, you got to give me the ticker symbol. Never heard of that company. T-Bone. Let's get rid of that. Let's do that. We're good. We're good. Everything seems to be good. Recording. All the levels proper. Day. Good day. Good day. AMD. Advanced Micro Devices. I don't know why people like companies that are having issues with their bookkeeping. Especially when we're in the news. We're having issues with our bookkeeping. Numbers just don't seem right. Yet you're putting your on the list. It's up on the board. Might as well. What's going on here? Oh, that's not good. Well, that's not good either. Now it doesn't want to do anything. Oh, that's it. There we go. Delete. Calibri. Control-Alt-Delete. Thank you. Told you to get Mackie. Who the hell's Mackie? Oh, to get a Mac. You totally new? Yeah. I'm not quite sure that's going to go over very well. Anyway, Nike is at top of the list. Let's down, up, down, up. We're right now at 6083. All right, 6083. Well, let's take a look. Currently at 6083, we'll be looking at the 61s. The 61s are going for 255. Now, 255 on a $61 stock is over 2%. Remember, I tell you, I'm looking for one. Damn it. Oh, much better. All right. Ooh, that one didn't taste quite right. High of the year was a year ago, 97.40. Look, high of the year. It was a year ago. Okay, well, from there, we dropped, raised, dropped, and trend. Dropped 1, 2, 3, 4. Fourth time this thing has dropped significantly in the past year. Well, here's where we are. Or is she? Let's zoom in a little bit closer and take a good look at that. 10. What the heck is EFX? Well, before we get to that one, let's take a look. All right, last 30 days. Down, up, down, up. What's going on here? Now, I normally would have jumped into this one today because it did open higher than it closed yesterday. I always tell you, anytime I see a 30-day bottom, right there, I look for 2 days to the upside, and then on the third day, I jump in. Well, take a look. Monday was higher. Tuesday was higher. Now, Wednesday, even though Wednesday closed lower than it opened, it still opened higher than yesterday's close. So I would have jumped into it. It's currently at 60.83. So let's take a look from this morning. Because this thing, she opened up at 61.40. Day bottom, right there. 2 days to the upside. 1, 2. Now, I'm not going to say I wouldn't do it even though it's down at the moment. Because, factually, I would have jumped in if I had any money. Now, you guys all know that all my money is invested Monday and Tuesday. Wednesday comes along, I very rarely get into anything on a Wednesday. Because Wednesday and Thursday, most of my money's tied up from Monday and Tuesday. Okay, see, I'm a weekly trader. I do options. Weekly options. Monday to Friday is the whole week. So first thing Monday morning, all my money is invested. Or at least 85 to 95%. Lately, it's been more like 75 to 80 because we have that TDS crap going on with some. So let's take a look. What would the 62 look like this morning? All right. So the 62 right here. Well, that one. So let's do one. The 62 right there. All right. One contract at 62. That are new here, and those of you who've never been here before, I like to do what's called a covered call. Specifically, covered calls on quality dividend stocks. Now, I consider quality dividend stocks any company that's increased their profits every year consistently for at least 2 decades. That's my idea. Okay? You guys got to figure out what works for you. What is right for you may not be right for me. And I'm going to call you out. Now, I'm not going to insult you or anything. I'm just saying that's something I would never do because I'm very particular of what I do. Okay, when you reach retirement, you have two options. One, rely on someone else to make you, to give you money every month to take care of your bills. Or do it yourself. Well, I chose the latter. I chose to do it myself. Because if it wasn't for me doing it, I'd still be working for someone else trying to build up that nest egg. So if I did give it to a professional money manager, they are so gracious to give me 4 to 5% per year. Well, 4 to 5% per year, I would have to double or triple or quadruple what I already have in order to make ends meet using their logic. So my logic, simple, safe, predictable, consistent, 1% per week, fine. I got to retire with what I have. And I don't have to work anymore. Because 1% is perfectly fine for the obligations that I have on a monthly basis. The process works 275 days on Nike, 61 call. Okay, AWCO3, I'm not quite sure what you mean by that, but okay. And Uger wants to look at EFX. We'll look at that in a minute. Let's finish up with this one. One con Nike. This morning she opened up at 61. I'd be looking at 62s. Blow smoke. I would have done that because I would have. Okay, this is what it would look like. Buy one, call Nike. 100. That is the weeklies. 3 July 25. That means this option is going to expire next Friday. Not this Friday, because we only got 2 days left. What kind of option premium do you think you're going to get with only 2 days left? Not a whole heck of a lot. So, next week. The $62 call strike. Because this morning, the stock was at 61.40 or whatever like that. Whatever it was. So 62 would have been the one I personally looked at. $62 call. Nike at the market to open. Now, profit $315.50, $58.85 would have been the investment. Well, let's see what that looks like for this week. Now, for those of you that are new, let me briefly explain to you what I'm doing. Okay, you may think I'm buying and selling stocks, options. No, I am creating cash flowing assets. Think about it. You buy an asset, it gives you money every single week or every single month, however you want to look at it. Well, I'm looking at it on a weekly basis. Okay, I'm creating a cash flowing asset, weekly cash flowing asset. Okay, it just so happens to be Nike on the list today. So let's take a look. What does this look like? Okay, 315 is the profit, so we get the calculator out. Okay, where the hell did the calculator go? Where's my calculator? Try this one time. Calculator. To figure out, to make the calculation, what is the rate of return? Well, profit, 315. Cost of the trade, including commissions and fees, 58.85. All right, let's do a little bit of math. Okay, 350 profit. Whoops, not 2. 315, and we divide it by the investment, 58.85. 58.85. And it gives me a grand total of, holy cow, 5.3% for 1 week. Think about that. 5% for 1 week. So you got a couple questions to ask yourself. Number one, does it make sense? Buy a good company, okay, invest into a good company, create a cash flowing asset. Whether you get 1 contract, 2 contracts, 5 contracts, it's all the same. You're taking a chunk of your money and you're creating an asset. Okay, well, the asset here is 100 shares or 1 contract. Well, 1 contract is going to give me $315 profit just for this week. Now, next week, it is going to be different because the stock prices move up, the stock prices move down, just like any other cash-producing asset. If you have a classic car that you rent out on special occasions, same thing. If you have a residential rental real estate property, okay, vacation home that you rent out. Same thing. That asset cost you X amount of dollars. What is your rate of return? Well, whatever you paid for that asset, whatever comes from it, that's your profit. You take the profit, you divide it by the cost of the asset, and that will give you your rate of return. Well, this asset here, 100 shares, is costing me $5,800. Okay, now I'm selling it to someone for the same price I paid for it, $61.50. Well, I'm selling it at $62, so I get a little bit more if it sells. If it doesn't sell, I'll do the exact same thing next week. Now, next week, I can almost confidently say I'm not going to get 5% next week. What if I get 1, 2, 3? Is that okay? You have a couple of questions you need to ask yourself. Number one is, does it make sense? Create a cash-producing asset, sell something every single week, get the cash flow coming in. What does it mean? Okay. Number two, do you like this company? It's a simple question. Do you understand the company? Do you know what they do? Number three, are you okay with buying it at this price and holding it until the day you die or until it hits your target? Well, my target is 62 because the current price is 61 and change. All right, I want to sell it for 62. And then I want to create cash flow every single week. So next week, or I should say next Friday, when this option expires, because the options I'm looking at expire every single Friday. So every single Friday, I go in and I take a look at my balance sheet. What did I pay for it? What strike price did I sell? What is the stock at now? What does that mean? What do I have to do? Well, I actually have no idea because today's Wednesday. I won't know what to do until 2:30 on Friday afternoon. Because at 2:30 on Friday afternoon, that's clutch time. What does that mean? That means the 2-minute warning. That means we got one play left to go. However you want to call it. Options expire at 3:59 p.m. Because at 4 p.m., markets close, you can't do anything. So I have to know exactly what I'm going to do by 3:59 p.m. on Friday. So at this moment in time, 5% return on Nike for 1 week? Hell yeah. Why the hell not? Did I write that one down? Yep, I wrote it down. Okay, I wrote it down, 62, Nike, and it came up with 4 point something. Well, this one's 5.3. That works for me. Well, think, does it make sense? Buy a cash-producing asset. However you want to verbalize it, however you want to compartmentalize it, okay, figure it out. Okay, for me, asset. Okay, 100 shares, one contract brings me in 325. Oh, yeah, it's moving. Because it was 315 a little while ago. So apparently it's trading after hours. So does it make sense? Do you like it? Okay? Are you okay with it? Now, it's not that difficult. You have to be able to be okay with whatever choices you make. And you also have to understand that the valuation of this cash-producing asset is going to fluctuate. It's going to go up. It's going to go down. Now, if it goes up, great. You adjust your strike prices according to what did you buy it for? What strike price you're going to sell? How much time do you got left? What does it mean? Okay, as the stock price goes down, same thing. What did I buy it for? What strike price did I sell? Where is the balance? Capital, risk. It's a balance. Light, dark, hot, cold, hard, soft, balance everywhere. Okay? So, 5.3, hell yeah, I like that one. Okay, so, where am I? Somebody had a question. EFX. Okay, Uger, I don't know, is that right? Uger, EFX. Never heard of it. Let's take a look. Let's get out of there. Let's go back to single. Let's go to here. Let's Uger was the very first, second one to ask. EFX. Equifax. Okay, Uger, come on, dude. You've been here before. Okay, I'm really good with names. I am. Uger, you've been here before. You know. You've listened before. I don't do monthly options. 18 July, 15, 17 October. The numbers just don't work. Okay, the sign, you might not be able to read it. It says weekly options. Okay, I don't do monthlies. The numbers don't work. Pressure! What's happening, dude? How's it going? Okay, what do we have over here? Totally. All right, let's keep on going. Uh-oh. 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 What do I have? What do I have? What was that? Oh. A couple people over here want to be invited live. Now, for those of you that want to be invited live, and so we can interact verbally and we can whatever, you got to send me your phone number first so we can have a conversation. I don't let just anybody come on and co-host with me unless I've had a conversation with them. Don't take it personally, because I really do not want to talk about Amway. I don't want to talk about politics. I don't want to talk about religion. I only want to talk about dividend investing for weekly cash flow. How do dividends play into this? OGIRS. Uh-oh. Should I really pay attention to the OGIRS? The name doesn't even sound that good. Okay, no, if it was IRIS, not IRS. Okay. Anyway, how do dividends play into this? Well, simple. You have two choices when you're picking a stock, right? Especially dividend stocks. Because a dividend is a portion of the profits the company gives back to the shareholders, and that's us. We are the shareholders. When we buy, well, we become shareholders. When you buy some stock in a company, you own a portion of that company, which entitles you to a portion of the profits. So, two choices. Are you ready? You can invest in a company that takes all the profits, puts it back into the company so that the stock price will grow. Yeah, if that's what you're looking for, you're in the wrong place. I'm trying to be polite. You're wasting your time if you're looking for capital appreciation. That means you buy a stock and you wait for it to go up. It happens every day. You buy a stock, it shoots to the moon. Well, if that's what you're looking for, you're in the wrong place. Sorry. I'm looking for cash flow. I'm 61. I'm retired, which means throughout my working life from 1973 to 2 years ago, 2022, how many years is that? 73 years. 1973 to 2022, something like that. Okay? So the money that I have earned has to last me the rest of my life. Now I'm 61. I'm in excellent health. I don't take any medication. I play soccer still. Believe it or not, I still play soccer. I don't play as often as I'd like to, because as much as I hate to admit it, my body just won't do what it used to do in my 20s and 30s. So if I play soccer for 1 or 2 hours, it takes me 2 or 3 days to recuperate. It just is what it is. It's part of getting old, and we all know it's coming. Whether you like it or not, or whether you agree with it or not. You got no choice in the matter. It's Father Time is just tapping me on the shoulder saying, brother, you just can't do this 21-year-old stuff anymore. It is what it is. All right, but anyway, besides the point. All right, so dividends. Someone asked a question, where do dividends come in? Dividends come in specifically. Let me go up to the screen and explain to you where dividends come into this game. Let's get out of here. Let's get out of here. And you see all this, see the calendar behind me? You see all these little tiny green dots? All these little tiny green dots represent companies that have increased their profits and have dividends that they want to give back to their investors. Now, we look every single week, usually on a Monday, to find out how many companies can we invest in this year or this week. Well, this week, it was 10,136. That's a lot. Okay, so my criteria, I only have 2. When I'm picking a stock, I have 2 criteria. That's it. 1, consistency of profitability. That means the companies can say last year than they did the year before. Well, think about that. 20 years in a row. More and more and more and more and more profits. Do that 20 times. Well, out of 10,136 companies, only 300 fit what I'm looking to do. Okay? Ready? Here we go. Dividend Kings. Okay? I believe there's 54 companies that have aristocrats. Companies that have increased their profitabilities for 25 consecutive years. Then you get the Dividend Champions. 150 companies that have increased their profitability for 25 years. Do you see a little discrepancy? 25 years. Okay, and then list number 4, the Dividend Champions. 300 companies that have consistently increased their profitability for 10 to 24 years. Not quite 25 yet, but 10 to 24. There's about 300 companies like that. And then for the fun of it, if it's good enough for Dave, it's good enough for me. Oh, sorry, Warren. If it's good enough for Warren, it's good enough for me. We use Warren Buffett's list. So those 5 lists will give you over 300 companies that look good. All right, let's take a look at some more questions. That's what I'm looking for. Those are the stocks I'm looking at. All right. Okay, Uger, EFX, no. H, Hollywood, what's going on? Key to Life, how are you today? AWCO, okay, you're going to explain that to me in a minute. 275 days on Nike, $61 call, don't know what that means. Some comments in this live were filtered. Apex, would you consider TSLL at very low price and 4% per week and pays dividends? Now, believe it or not, every once in a while, I will throw some mad money at something like TSLL, if the numbers work. Only if the numbers work. But yeah, but mostly, no. Royal Saucer, Trinity. You gotta, Trinity Capital, you gotta give me the ticker symbol. Okay, if it doesn't have 2 decades of consistent profitability and weekly options, it's gonna automatically be a no. So make sure you understand what it is you're looking at. James Davis, Nike has what that means. Why don't numbers work with monthlies? Holy cow. Did you really just ask me that question? All right, simple math problem. I'm looking for 1% a week. Let's look at a monthly. Oh, realty. Here we go. Okay. Here we go. Here we go. Okay. We don't need realty is like, oh, realty. Yeah. No, thank you. All right. You ready? OG Iris. Let's look at the numbers. Okay. Doesn't have a 57, but they do have a 57.5. All right. Let's do that one. 57.5 is going for 60 cents. So let's do some math. You ready? How much is it costing? You know what? Let's just do the whole game. All right, let's just go do this. All right, put that over there. Let's go here. Let's take a look at covered call. Let's do the 57.5 right there. Let's do one contract right there. At the market to open. And here we go. Buy one covered call, O Realty, 18 July 25. That's the next option. 57.50 at the market to open. Well, the profit is $107. Okay, $107. Well, what is the investment? Divided by 5643 gives me a grand total of 1.89. It's a monthly. There's 12 months in the year, so let's multiply this by 12. 22% might be good for you, but that's only half the problem. Because wait, it actually gets worse. Hold on. So if I do a monthly on O Realty, I'm going to get 22.7%. Okay, that's good for some of you. I want 1% a week, which is 50% because I just that idea. Let's go back here. Now we're at 625. So So 528 would be right there. All righty. So, Mr. IRS, are you ready for this? Okay. This is 1 month. Okay? You're way over here, 55.5. Okay? She goes up to 56, drops back to 55, jumps up to 58, drops down to 57, jumps up to 58.5, back down to 57. Great. Now, tell me, where is it going to be in 30 days? This is 30 days. Tell me, where is it going to be in 30 days? Now, I can pretty much guess a pretty close idea at 5 days. Well, that's 1 week, 5 days. Okay? Weekly options, okay? So, I've got to guess, where is it going to be in 30 days? Yeah, that ain't happening. Secondly, I'm getting 22% a year. No, thank you. I prefer weeklies, because weekly I can get 1%. Now, 1% every week, that's 50% per year. Now, I don't know about you. I didn't go to college. Terribly sorry. You're learning from an uneducated person. Didn't go to college. But I do know that 50% is a hell of a lot better than 22. Monthly options for this strategy do not work for me. Okay? For me. You work for you? Fine. You guys do it. I don't do monthly, so please stop asking me. All right? Monthlies do not work for me. All right? So, next. Next. I don't like monthlies. The numbers just don't work. And I love it when people say, why don't they work? Because of math. 1 plus 1 equals 2. Well, you do that 20 times. Well, it's only 12. But 1 plus 1 equals 2, but you do that 52 times. That's 52%. Well, 52 is better than 22. That's why I don't do monthlies. They just don't work for me. Sorry, it wasn't clear. Your process works. Bought Nike today, sold the 61 strike. Okay, 275 profit. Awesome, dude. Good for you. It's actually 10 days, not 1 week. But I bought the 62s. Okay, Eric, I don't buy options only because 80% of all options expire. But if you're doing the same thing AWCO did, maybe that works. All right, so sounds like less premium and more risk. Okay. I'm trying to figure this out. Less premium, more risk. Is that for the monthly or is that for the weekly? Because you weren't quite clear with your statement. See, I like questions. I don't really like statements because statements, what the hell am I going to do with a statement? And a statement's usually your opinion. Okay, if that's your opinion, sounds like less premium and more risk. The monthly. Exactly. Less premium, more risk. All right. No, I just don't like monthlies. The numbers just don't work for me. But I'm glad you agree with me, though. Thank you. Frederick, Windows key plus R, then type CAL, then enter will bring up your calculator. Thank you, Frederick. Alrighty. Daddy am the same as Odom on TikTok. Thanks. Thanks, Pressure. Okay. All right, so what do we have next? Chuck, how are you today? Why is your target price 60? Nike. And you get the backtrack. So when I say 2 days to the upside from a bottom, let's take a closer look. Okay? 30-day top, right here, 65. 30-day bottom, right here at 59. Okay? That's the bottom right there. That was Friday. Okay? So Monday was higher. That's 1 day. Tuesday was higher. That's 2 days. I want 2 days to the upside. Then, 2 days to the upside, I want to jump in on day number 3 if and only if it opens higher than the previous close. Oh, before I forget, for those of you who do not know or on your phones and you can't see the numbers, this screen right here is live on YouTube. So go to the bio, whatever website you're on, because we're streaming to, I think, nine different platforms. Okay, whatever platform you're on, go into the bio, look at the website, the 10-minute trader. I'll take you right to YouTube, the10minutetrader.com. This is live, so you can see the numbers a lot easier on your big screen TV. So I have a lot of people in the audience that say, hey, I listen to you on my phone in front of my big screen TV. So they're watching on the big screen TV on their comfy couch or the recliner, phone in hand, listening, and then watching the number on the computer or on the TV screen. Okay, so as I was saying, bottom was Friday, Monday, day 1, Tuesday, day 2. You'll hear me every single time say, I look for 2 days to the upside. On the third day, I will jump in. Usually jump in the morning. So what did the stock open up on? The morning. Okay, so put it right here. Okay, it closed yesterday 61.42. That was yesterday's close. So first thing this morning, if she opened up higher than 61.42, that's my cue to jump in the morning. So this morning, she opened up 61.45. I usually buy at the morning, 61.45. So what is the closest strike price to 61.45? 62. Now, I'm not going to blow smoke and say, well, it's at 60 right now. Let's do the 61s. No, because it wasn't at this price this morning. No, I wouldn't have. Because she opened up this morning at 61.45, which means if I bought it this morning, invested on Mondays and Tuesdays. I very rarely buy something on a Wednesday or Thursday. Rarely. Okay, I will if I get a dividend that just pops up out of nowhere. Now, you'll see that every once in a while. Okay, you're doing your trading. Now, I don't like to collect the dividends. I just use them to tell me when the stock's going to move. Okay, let me explain. I'm going to explain that in a second, okay? Because I just opened a can of worms, and you guys are going to want to see what that can of worms looks like. So to answer your question, Eagle 18, I'm not going to lie to you, okay? Monday was 1 day to the upside. Tuesday was 2 days to the upside. This morning, she opened up what she opened up at. The numbers are what they are. If I bought it, it's a strike price to that, which would have been the 62. Okay? Yeah, for Nike. All right, so why do I not want to collect dividends? Let me show you. Back here to March. Let's change this. Whoops, to this right there. Alrighty. Now, this one makes a little bit more sense to me. Now, what you're looking at is a calendar. Regular calendar. See, June 2025. Today is the 25th. Okay? Now, these little green dots represents companies that are going to pay out a dividend. As a matter of fact, this is called an EX dividend calendar. Looks like any other calendar, except has these little green dots. Now, when we're dealing with dividend stocks, there's 4 dates to remember. Like birthday, anniversary, Valentine's Day, dates. Okay, 4 dates. Date number 1 is the announcement date. That's when the company's representative said, hey, everybody, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader. We had a great year. We made all this money. You're going to get your share in the form of a dividend on this day. That's the announcement date. Date number 1 is the day they tell you that. The announcement date. Date number 2, that's the important one. It is represented by those little green dots. Each one of these little green dots represents a company on this list that have increased their dividends for 25 consecutive years. Okay, so date number 2, EX dividend date. If you want to get the dividend, you have to buy it before that date. See the 27th? MDT, Medtronics, BEN, Ben Franklin Financial. Okay, Franklin Financial. If you want to get the dividend, you've got to buy it on the 26th, the 25th, the 20th, the 11th, the 4th, the 6th, any day before this date. If you buy it after this date, you don't get the dividend. Whoever owns, date number 3. Stock on the date of record is entitled to the dividend. Bitch, moan, complain all you want. If you do not own the stock on the date of dividend, own the stock on the date of record, you don't get the dividend. Date number 4, the payment date. That's when you get your money. Cha-ching. Yeah, 4 dates. Now, I don't like collecting the dividends because, see little green dots? Stocks, dividend date. Okay, the stocks go up in price just before the EX dividend date, but they go down after the dividend date. So I don't really like to collect the dividend. I like to buy it. See, Cincinnati Financial, the 23rd. I like to buy it 2 weeks prior. So it would be the 9th on a Monday. Okay. General Dynamics. Okay. It is on the 3rd of July. If I'm going to buy that and look to get the dividend, I'm going to buy it 2 weeks on a Monday, the 16th. Okay. So 2 weeks before the EX date, that's when I want to buy. Raphael, QYLD. Really? Really, dude? Now, when I say, no, oh, hold on a second. I have, we want to get right there. Look, media. I actually get more social media than that, but those are the ones I'm not. Let's take a look at YouTube. Videos. The 10-minute trading strategy came about when my 9-year-old daughter wanted me to learn how to do it. Now, in 2008, my daughter was 9. She said, "Daddy, what are you doing? Can you teach me?" Okay, so I'm going to introduce you to my 9-year-old daughter.
Hi, I'm JC, and as you being part of my internet website club thingy, which my internet website club thingy, which my dad doesn't like me calling it that, but I do. Being part of that, you're going to be getting weekly lists of stocks and auto trading, and every month you'll be getting 4 lists of stocks.
There's over 20 days in the month of January. There's over 21 days in the month of March. What does that mean? That means every single day you can buy a different stock. Every single day there's a different company paying out dividends. Anyway, no, seriously.
Come on, that's funny. I look at it every time I look at it, I laugh because how else do you keep a 9-year-old entertained? Especially trying to teach them to invest in stocks. It had to be fun. It had to be simple. It had to be safe, predictable, consistent, and most importantly, no way for her to lose. So I had 5 simple rules. Rule number 1, never buy anything that's not on the list. Well, for you guys, it's never buy anything that doesn't make sense or you don't want to hold on to. Now, when I say to my daughter, don't buy anything not on the list, well, she had a list of stocks. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. If it's not on one of those 5 lists, it was an absolute... I don't care how good it looked. I don't care how many talking heads on TV say, ooh, 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 buy this, buy... No. If it's not on the list, it's an automatic no. Terribly sorry, she's 9 years old. She needed rules. Okay? Rule number 2, never sell at a loss. It defeats the purpose. What if the stock drops? Well, that's what they all do. They go up, they go down. What do you expect? Just because you buy it, it's going to not go down? Hell no. Come on. Be serious. Stocks go up, stocks go down. That's all they do. They don't come to your house and take the dog for a walk. They don't wash the dishes. They don't come to the house, make the bed, put the little candies on the pillow. No, they go up, they go down. That's it. That's all. If you expect them to do anything else, this is not a game for you. You shouldn't be playing this game because they go up, they go down. You're going to buy it, it's going to drop. You're going to buy something else, it's going to shoot up. Never buy something you don't want to hold on to long term. Okay, if it doesn't make sense, don't buy it. If you think it's going to go down and you're going to panic, don't buy it. Never buy something that doesn't make sense. That's number 1. Number 2, never sell at a loss. Number 3, this is the one that boggles my mind. Okay? Profit's okay with you. But for me, 2 decades, 20 years. Now you may think, that's a lot. No, it ain't. Stock market's been around for 400 years. 20 years is nothing compared to 400 years. Okay? There's a company called Consolidate. Rule number 4. Weekly options only. I don't do monthlies. The numbers don't work for me. For me, if they work for you, fine, great, no problem. Not for me. Okay, you ask me to look at a weekly, a monthly option, it's going to be an automatic no. I'll look at it and then tell you no. But for me, monthly options just don't work for me. I like weeklies. Okay? 5. Make sure all the numbers work. Now, we're going to get into that in a little bit and explain to you what do I mean by that. Well, I'm going to tell you plainly. What am I buying it for? What strike price am I selling? Am I collecting a premium? If so, how much? Is it 1% or more? If not, no. Simple. Make sure the numbers work. They either work or they don't. Okay? There's 10,136 companies to choose from. My list is only 300. I'm okay with that. Next. Rudy, I bought that list for $20. Why? You could have got it for free. You only mentioned 4 groups. No, I didn't. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's. That's 5. Hey, Boogeyman, in theory, that's plenty impressive. That company can do that. That's not a question, that's a statement. I like it if you guys have questions, not statements. Odom, thank you. Apple Hospitality REIT. Charlie, you got to give me the ticker symbol because I have no idea what that is. Right now, Raphael wants you to look at QYLD. Now, Raphael, I appreciate your interaction. I really do. If you could do me a huge favor, Raphael, don't ask me to look at something that you do not understand. If you don't understand it, why are you asking me to do the work for you? I know what QYLD is. So let's take a look at it, and I'll tell you why I don't like it. Because apparently,